Climate change. That's always a fun and exciting conversation to have. How you doing this morning, Sean? Thank God it's Friday, right?
Hey, good to see you. Good to see you.
Likewise, yeah. So we have a guest today that I'm pretty excited about. He is an award-winning TV and radio show host, a best-selling author, and has been seen and heard on ABC, CBS, CNN, Fox, and NBC. He's spoken in front of tens of thousands of people on stages all around the world, including Harvard University. Over a decade ago, he founded Fortress Credit Pro. We're going to talk a lot about that. America's first credit repair company that was 100% paid on performance. They have removed millions of late pays, collections, charge-offs, repos, short sales, foreclosures, tax liens, judgments, bankruptcies from credit reports. And he's helped tens of thousands non-qualifying applicants become mortgage ready in as few as 90 days. He's currently the host of the School of Wealth podcast. Is your head swimming with financial questions and you don't know who to ask? He is America's credit expert. And I want to say here he is, Rondi Lambeth, but he's left. He's left. What's going on? Rondi Lambeth.
And he'll be back.
And he'll be right back. Yeah, we'll put this up so that you can see Rondi. Oh, we lost our guest. That's the first time that's happened.
He fell off. He's probably just getting his stand-ups in, since he's
That's right.
A competition guy.
That's right.
Well, what's funny is I've had issues with my computer of late too. So
yeah, I don't know. Mine's been pretty solid.
Sometimes technology just fails you.
Yeah, it sounds like he's trying to connect, and then it just drops off.
Interesting.
Well.
Let me tell you about me turning 45. How about that?
Yes.
I'm really looking
45, man.
I'm really looking forward to it. I'm 45, but my hair is at least 78. I'm pretty sure. So
okay,
I'm not sure exactly what age. Maybe I should just average the two, what I look like versus what I actually am. So I don't know.
It says so. Rondi just said that it's kicking him. Okay, I'm gonna stay in the studio.
Want to do a restart?
Yeah. I think I'll do that. Dang it. We'll be right back.
BRB.
Maybe. Let me see what he has to say. I have not ended anything. What a letdown, man. What a letdown. Let's see. Home. Live. Enter studio. Invite guests. Copy.
Yeah.
Why would it?
Well, on a side note, since you're working on that, I'll just keep talking. Of late, it seems like just inquiries, conversations about real estate and stuff and loans.
Yeah.
Seems to be picking back up again. I'm not exactly sure why.
Yeah,
nothing's really changed.
for sure. Okay.
Great
All
environment.
right, here we go.
But,
Here we go.
yeah.
Here he is, Rondi Lambeth. Rondi, man, that was a struggle. How are you?
It kept saying that you changed it to local hosting versus virtual hosting. So it just kept kicking me out. So I just got back in.
Oh, weird. Yeah, it looked. I kept seeing it show you trying to get in. I just texted you something if you want to have a look at that real quick.
Sorry about that.
That's okay, no problem. I was we were kind of laughing about that's the first time that's happened, but oh well, technology, right?
Usually we say bye first, but
I know. So
Sean had me black. I couldn't see Sean, so I was like, I'm out of here. I guess now.
Yeah.
But you guys, your voices sound so much alike. I wasn't sure which one we lost.
Well, we both hit puberty a long time ago. So
yeah, long time ago. I don't know who's older, but Sean's turning 45 this weekend, so that's a big number. Not as big as mine. Anyway, so Rondi, you've done all these things in the financial world, in the tax world, et cetera, et cetera. You must have grown up with wealthy parents, and you grew up around this type of information, right? I mean, somebody taught you how to do all this as a youngster, right?
Yeah, that's exactly what happened. I grew up in Parma,
Idaho.
Yeah, Parma, Idaho, southwest. It's about an hour outside of Boise. And I grew up in a shack that used to be someone's storage shed. No running water, no electricity, and I'm the oldest of 11 kids. So you can imagine this shack is smaller than my master bedroom is now. And I grew up there, no running water, no electricity. We got our food out of a dumpster, and I was brainwashed from a very little kid that rich people were evil, money's bad, education is a waste of time. And about at age 15 or so, I got tired of the daily beatings of one of us kids, eating out of the dumpster, sleeping outside. And I decided, you know what? I think I could probably do better than this. I can sleep outside on my own. I can get food out of the dumpster on my own, or eat at school for free, and I won't get beat up anymore. So I left home when I was 15 years old and kind of moved around through the foster care system. Eventually at 16 years old, landed a job in Eastern Oregon at a funeral home. And I started washing cars for this funeral director. And next thing you know, he hires me full time. I become a licensed embalmer and funeral director in high school.
Wow.
And that's when I started learning about money, and I started learning about credit, and I started learning about taxes. And this very wealthy man kind of took me under his wing at 16 years old to start teaching me. And he taught me that it doesn't matter how much money you make. It matters how much money you keep. And it's your responsibility to figure out the tax code, because your CPA is never going to figure it out for you. Your CPA is a certified public accountant, not a tax professional. They're there to file your taxes, not save you money. And so that was my beginning of my financial journey, and I've just expanded on that ever since.
Wow. Yeah, because it seems like in order for people to learn these things, generally speaking, it's taught to them young, and it's by people who have wealth, because like you said, those people want to keep that wealth. And so whether that's generational or they're a self-made, person or couple, they learn that in order to keep their money, and then teach it to their children, who hopefully perpetuate that and keep doing the same thing. So that's the assumption right off the bat, is that as somebody who teaches this, you must be someone who was taught it. But you're a self-made person. You've taught it to yourself, and are constantly learning, as I understand, and then pushing that out and coaching and teaching people what you know. Can you tell us why a credit score is important? I mean, why is this so important to us? We have it so entrenched in our minds and our brains that we have to have a good one. Why?
Your credit score is a lot like oxygen. You can't live very well without it. People say, I don't care about money, I don't care about my credit. Well, it's like saying I don't care about oxygen or water. Eventually you got to have it. I believe that it's the number one number in your life. It determines how much you pay for gas, groceries, electricity, clothing, health insurance, life insurance, car insurance. It's not just how much you pay as far as the interest rate on a mortgage or a car. Mm-hmm. I'll prove it to you. If you pay for gasoline for your vehicle with cash, check, or debit card, you pay more for that gas than I do, approximately 5% more. So if gas is $4 a gallon and you pay cash, it's $4 a gallon. If I use my American Express, my Citi, my Chase, my Costco card, it's $4 a gallon at the pump, but I get 5% cash back. So I'm only paying $3.80. Now, you might say, well, it's only 5%. Well, 5% over a lifetime is a lot of money. I take my entire family. I got 3 kids and a grandson. I take my entire family, their spouses, significant others, my girlfriend on a trip every year outside of the country for Christmas, and it costs me $0. I use my mileage for my airlines, for my airline tickets, points from the credit card company for the airfare, the entertainment, the food. And yeah, Dave Ramsey says, I've never met someone that said I become a millionaire from credit card points. That's probably true. But all of my millionaire friends save tens of thousands, some of them hundreds of thousands of dollars a year in expenses from their credit card points. So the reason your credit score is so important is if you leverage your credit and use it as a tool and not a trophy, you can become very wealthy using your credit, because you can use your credit to buy real estate, have someone else pay off that real estate, leverage your credit to buy more real estate, get someone else to pay that off. You guys know the game.
Right.
And this is how you can become wealthy, using credit as a tool and not as a trophy.
So
can I interrupt real quick?
Yeah.
Going into that, right? We all know, we've seen the notes and the emails and the whatnot. Me personally, I'm getting bombarded with offers for credit cards of late, right? Mm-hmm. I know that credit card utilization is like at all-time high, right? What is it, like at $1 trillion now is the balances?
Yep.
Almost $1 trillion.
Yep.
So I would bank that most people don't have that same mentality of using it wisely versus using it for things.
Yeah.
Right. It's a living above a pay grade, basically.
Sure.
That's what I'm thinking. But yes, I think you're exactly right with being able to use it effectively, not as a trophy, right?
And I've done
That's
this.
what you mean.
Yeah.
I've done this.
There's a lot of people that should not be driving a car, right? Because they're not qualified. There is a whole bunch of people sitting in the White House or in Congress that should not be there at all. We saw it this week. Stand at the podium and just like looks like he had a stroke because he's too damn old to be doing this. So there's lots of things that many people should not be doing. There's a lot of people that shouldn't drink alcohol at all. And if you treat credit like you treat alcohol, I call them creditaholics. They're like, all credit's bad because I'm not disciplined enough. I'm not smart enough. I'm not educated enough. I'm ignorant when it comes to credit and money. So therefore, all money and credit's bad. And sometimes people treat it that way. And if they do, yeah, maybe they should just go live under a rock and pay cash for everything.
Yeah. And I've done it both ways too. When you and I met, we talked about this a little bit where I filed bankruptcy when I was 21 years old because the first thing I did was got a Mervyn's card. I don't know if anybody remembers Mervyn's.
Oh, I do. Yeah.
I bought some cool T-shirts and some jeans and this, that, and the other. And to me, as a young man, it felt like free money.
Yeah.
And then I got another credit card and I bought scuba gear and whatever. All of a sudden, I'm $20,000 in debt.
Yeah. And
didn't have the foresight to realize $20,000 isn't that much money. And I filed bankruptcy. Well, that affected me obviously for 5 to 7 years. And now I can use credit cards as a tool. And you mentioned the Costco card and getting money back. And we pay everything off before we pay a penny in interest. So we're playing with the casino's money at that point. So I think though that there's a lot of people who can't do that, and it requires a willpower or some discipline that people oftentimes don't have because, like you just said, let me go get that trophy. Let me go take everyone out to dinner. The worst thing to when you're not paying off your credit card to spend money on a credit card, but let me go. I'll take it. I'll pay for everybody. No problem. All of a sudden, you're 500 more in debt, and that's going to cost you $750 by the time you've paid it off. That's an expensive dinner, right? So now let's
and that's one of the reasons, guys, I started Fortress University is there's not a high school, a college, or any platform out there that really teaches people about money, credit, and taxes in a holistic way. And that's what we do. We teach people increase your credit score so you can get better debt, use that debt to pay off your existing debt. And then we teach them how to reduce their taxes. So now they can take the money they're saving from their taxes to get out of debt faster and eventually start investing. And our students learn in just a matter of a few months how to take a 30-year mortgage, convert it to a 10-year mortgage without refinancing. So they're making the same payment, but their house is paid off in 10 years instead of 30 by maximizing their credit. And look, some people won't do the work to become financially free. Some people won't do the work to go to the gym to become healthy. And it's just that's just how it is. And it just makes it easier for folks that will put in the work to learn a little bit about money, credit, and taxes.
Well, you bring up a really interesting point and something that Sean and I see all the time in the real estate world. We will have people that come to us looking to buy a property. And then I say, well, here's the lender you want to work with. They call Sean and they say, oh, well, we're business owners. Awesome. This is going to be great. And they go, well, I show that I lost $25 last year.
Yeah.
So we see there must be a happy medium where you want to lower your tax basis, but you don't want to go so low. And correct me if I'm wrong here, but you don't want to go so low that it looks like you never made any money, right?
Well, the thing with that, and we deal with this quite a bit because probably 30% of our clients are business owners because we attract business owners because we get business owners on average $250,000 to $500,000 within 3 to 6 months of hiring us in 0% funding, credit cards, loans, lines of credit, etc. And so I see this a lot as a business owner myself. It is important to understand how the mortgage companies will look at your taxes. What most mortgage companies will do and what most people will do is they just look at the top line, the bottom line, they skip the middle. But there are things that we teach to write off that Sean could add back in. For example, depreciation. Depreciation is a write-off, but you get to add it back in because it's not really a cost. You can also add back in what's called the Augusta rule. So there is a part of the tax code that allows business owners to write off essentially unlimited amounts of money. So they can take it out of their business bank account, put it in their personal account, and pay no income tax on it. And there's no cap on how much they can do that. So for example, if you go and you buy an exotic car or you lease an exotic car, and we see them everywhere, you know, the Rolls Royces, the Bentleys, the Ferraris, the Lamborghinis, and these guys are always like, I get to write off my Lamborghini. It's leased. Well, you kind of do, but it's limited to $18,000 per year, $1,500 a month. So if their lease payment's $4,500, they think in their mind they're getting a $4,500 write-off. They're not. What's happening is it shows up as a $4,500 write-off, but your CPA adds back $3,000 a month as income. So you're still paying income tax on it. So what I teach is instead of doing like the lease on the car that does impact your ability to buy a house, do the house instead. And you could take $100,000 out of your bank account, put it in your personal account, pay zero income tax. You can also pay your children $250,000 per child, $250,000 per kid. Take it out of your business account, put it in your kid's bank account, and you can add that back on your mortgage. So this is how, as a business owner, you can have a loss but just add it back and then you can buy your house.
Depending on how the money was spent.
Exactly. So we teach people how to spend it the right way versus like a credit card. You shouldn't be using your credit card to go out to dinner unless you pay it off in full every month.
Right.
You shouldn't have consumer debt. You should have business debt or debt that someone else pays. And it goes the same way with the tax deductions. If you're wanting to buy a house, get tax deductions that Sean or any other mortgage banker or broker can add back in at the end of the day, such as depreciation.
Okay. So then we jumped off with personal credit score there. Now then we should talk about business credit score, right?
Yeah.
Do I have a business credit score? Is my Dun & Bradstreet, or what's that all about?
So business credit is just like personal credit. I mean, a business is a legal entity if it's truly an S corporation or C corporation. If it's an LLC that's never been elected to be an S or C corporation, taxed as, it's a sole proprietor. It goes on your personal tax return. It's not a legal entity. So if you have an LLC taxed as, so you filled out the IRS form 2553 and you're taxed as a C Corp or an S Corp, then it's a separate legal entity and you can build a business credit profile under your EIN number, employer identification number.
Mm-hmm.
Your DUNS number that you referenced, Dan, is your number at Dun & Bradstreet, which is the largest business credit reporting agency out there, otherwise known as a credit bureau. That's your file number. It's not your business credit score. It's not your tax identification number. It's your file or account number at Dun & Bradstreet. Now, you can build business credit with Dun & Bradstreet, and when you do, you get what's called a PAYDEX score, PAYDEX. In order to qualify for business funding, you got to have at least an 80 PAYDEX score, which is equivalent to an 800 FICO score. To build an 800 FICO score, it takes 10 years. To have an 850 FICO score, your credit report must be at least 20 years old. The advantage of business credit is you can build the equivalent of an 800 FICO in 3 months for business, and 850 FICO in 6 months. So your business credit can be built very, very quickly. The more you use it, unlike personal credit, the more you use it, the higher your score goes and the more money banks will give you. So you can establish business credit. I have millions, a little over $100 million of business credit and business debt that doesn't show up anywhere on my personal credit report. So if you're a business owner, you should be building your business credit so when you use that credit card for business purposes, it doesn't tank your personal credit score. And now you can keep it separate. So business credit is really important as a business owner.
So, and can I do that physically by, like, I have my Costco card in my name. Can I have a Costco card or other card? I like the Costco card in my business name and then use them separately to build the different types of credit?
Yes, 100%. So you can have a city personal card that Costco has and a city business credit card at the same time. You can have a Chase personal and a Chase business, American Express personal, American Express business. You keep everything separate. The biggest problem, though, with business credit and building it is 85% of banks don't report to the credit bureaus at all. And so you got to know what banks report so you can get in a relationship with those banks so they report to the business credit bureaus.
Why don't they report?
That's a great question. The reason they don't report is there is no Fair Credit Reporting Act for business owners. So if I wanted to right now, Sean, you're with Guaranteed Rate, great mortgage company, by the way. We do lots of work with your guys. And then Dan, you're with Keller Williams, correct?
That's right.
Another great company. We do lots of credit repair for our Keller Williams partners. So if I wanted to right now on my phone, I could go to Experian.com, pay $40. I could pull guaranteed rates business credit. I'll know how many credit cards they have, how many loans, how much debt they have, how much they have a checking account, how much they do in revenue. For $40, they cannot stop me from doing it. If I wanted to pull Keller Williams business credit, I could put $40 in there, pull it. I could pull Apple's, Microsoft's, Walmart's. There's no protection to prevent someone from just pulling a business's credit anytime they want. Now, why that's a problem is imagine if you are Bank of America and you work for Bank of America as a banker and you want to get Sean's business, but you want to see where Sean does his banking. Bank of America's employee could pull Sean's business credit, see that he's banking with US Bank, has credit cards with US Bank and lines of credit with US Bank. He can see the rate, how much he's using, and how much income he has within just a few seconds. He then could go, this Bank of America employee could go to Sean and say, hey, I know you're banking with US Bank and I know you're paying 21%. I'll give you the same credit card for 50%. I know you got a line of credit for 15%. I'll give it for you for 10. And now he could steal that business away from US Bank for himself. This goes on all the time, every day. So because of this, banks purposely don't report so their competitors don't know who their customers are. Yeah.
That's
so
because
that's why they don't report.
That's fascinating. It's fascinating because they're doing
Makes
it
complete
to
sense though.
Yeah, totally. But they're doing it to save their own business. Like, hey, we don't want anybody to take our business. So
what they do, guys, and this is why it's one of the things that's really cool about business credit. With personal credit, there's a grace period, generally about 30 days. So when your credit card bill or your mortgage specifically, when your mortgage is due on the 1st, if you paid it on the 2nd, do you know you're technically 30 days behind? You're 30 days late because you're paying in arrears. So on the 2nd of the month, you're 30 days late, but they generally give you a 30-day grace period before they report you late. Mm-hmm. With business credit, there is 0 grace period. If your payment's due on the 1st and you pay on the 2nd, they report you late. And now you're no longer an 80 paydex, you're now a 70 or 75, and you're automatically denied.
Wow.
The advantage of that is many of the loans, the lines of credit, and the credit cards we get our clients, our business owners, there's no financials. There's no personal credit check. If they got an 80 paydex or an 885 paydex, which is the equivalent of an 850 FICO score, it's a 1-page application, no personal credit check, no financials. Here's $100,000.
So they could be totally bankrupt on their personal side.
Yep.
But their business credit's in order, and they can continue to draw on credit on the business side.
Yeah. Yeah.
Okay.
So it's a really powerful tool if you use it. The problem with it is banks don't report, so you have to build it. And the problem is most people don't know how to build it. And if you're relying on ChatGPT for anything regarding credit, you're losing. Because ChatGPT relies on the internet for information, and almost everything you find on the internet regarding credit is wrong. For example, I'm going to put you guys on the spot, and I'm going to preface it with this. If you're wrong on the information, it's because you were told wrong. You were taught wrong information, because banks generally teach real estate professionals, mortgage brokers, real estate agents, wrong information regarding credit. So shout out, what is the proper utilization rate that you should have on your credit cards? What percentage do you need to keep it under?
15%.
Okay.
I'm going to go 30.
30. The industry standard, what they teach, the real estate agencies, professionals teach 30%. Why do they teach 30%? Because that's what the banks have told them. Why do the banks teach that? Because that's what FICO did when FICO Model 2 came out. When did FICO Model 2 came out? In 1996. So Sean, when you look at that mortgage credit report and it says Equifax FICO 2, that model created that software that created that Equifax mortgage credit score was developed it came to market in 1996. It was developed in 94. Imagine using Windows 95 right now on your computer. Right? So 30.
Well, anything's better than 10. I know that.
Yeah. 30% was what was for my FICO Model 2, which is 27 years old now. The real number, guys, is 1 to 5%. If you go over 5% on any of your credit cards and you have an over 5% total utilization rate, your scores will go down. If you have all of your credit cards paid off and you don't use them for a month, your scores will go down. FICO wants to see utilization of at least 1% on every credit card every month. And they don't want to see you go over 5% on any credit card on any month. So the number is 1 to 5 for maximum amount of score. If you're not trying to buy a house, the score doesn't matter if it goes up and down during the month with your credit cards, because when you get ready to buy, you just pay off the credit card, your scores go back up once it reports. So the real utilization, what you should be telling your clients is keep it below 5%. If they're at 30%, they're losing approximately 30 points. There's a big difference, as you guys know, of a 710 credit score and a 740 credit score. So you want to keep it 5% or below.
Yep.
So,
or jumbo.
So Sean, you had a question.
Yeah,
you had a question since we're talking about mortgage.
My question was in relationship to business owners, right? So people come to me, I look at tax returns. Obviously, they didn't use some certain things. They've written things off. The qualifying income doesn't match what they're looking to buy, right? On a Fannie Freddie jumbo investor guidelines. So then we look at typically like bank statement loans, right?
Yeah.
So in my mentality is, they give you a cash flow, they give you that expense ratio, right? So obviously the income usually increases based off of deposits in a business account. And like my mentality and the best way I usually explain it, maybe you can explain it differently, is either you pay the taxes to show the income, or we pay the interest in a higher interest rate for a bank statement loan, right? So it's like kind of, you're going to get it one way or the other kind of thing. But usually the interest, the amount of interest that you would pay, let's say, on that bank statement loan would be significantly less than whatever you would need to show to qualify for that same loan, if that makes any sense. I don't know.
Yeah, it does.
Just take on that whole situation.
Look, sometimes you just got to bite the bullet and either pay the tax or pay the higher interest rate. That's just how it is. And if that's how your business is set up and that's how your taxes look, then you just got to deal with it. If you do it properly and you use the tax code that allows for depreciation, then you don't have to worry about it, because your mortgage guy will just add it back in. But if you're going out
and home office and a few other things,
if you're going out and you're like, well, I don't want to pay taxes, so I'm going to go buy a $150,000 truck and run it through Section 179, so I get my $150,000 write-off the day I buy it. Well, that shit ain't going to get added back in, because that's an actual loss potentially. Or if you go on a business trip and you take your family and you write off that vacation, you can't add that back in. So you just got to be smart about your taxes when it comes to buying your house.
Sure.
And sometimes you got to bite the bullet for a year. That's just the way it is.
Yeah. And when I usually, when it comes to me, it's not like I can do much about it because it's kind of in the past, right? Like everyone that's filed for 2022, it's not like we're going to go backwards, right? So it kind of, you want to get in the market. I was like, I just try to explain it in a way that, this is the solution for people that don't show it on paper, really. And you don't, all the ad backs that we can use and all those things that we can generate extra income from. Not necessarily everyone ever utilizes, for that matter. But yeah, I just kind of that kind of perspective. And then number two is bouncing off of this. So like, let's say, I am a W-2 employee, right? So I'm not a business owner. So there's not certain things that I can technically just, write off as a W-2 employee without having some sort of side gig, right?
Yeah, the unfortunate thing is this: there's not a lot you can do as a W-2 employee. You can do your IRA, your 401k, you can do an HSA plan. That's about it. But there's no law that says you can't start a side business. In fact, the law is the opposite. It says anybody can do a side business, and almost all of tax code applies to small business. Almost all of it. So if you really want to reduce your taxes, increase your credit scores, start building wealth, you should start a small home or start a home-based business. Whether it's selling real estate on the side, life insurance, picking up dog poop. Have you guys seen the signs all over town? Dog poop, we scoop.
Yeah.
I know the lady.
Or number two.
Yeah. She owns paid cash for over 40 SUVs. She has 50 employees, makes millions of dollars a year here in Boise, picking up other people's dog poop. It's
crazy.
Incredible business.
I always thought there was just one guy who he was probably barely making it. He's out there picking up people's crap. Well, their dogs' crap.
Yeah.
But,
it's a great business model. So
in certain places, you can pick up human crap if you want.
Yeah. Well, you can sell your crap.
all over the place.
You guys know that? You can buy. LeBron James is selling his poop. A lot of these athletes are selling it now.
Oh, my God.
And you actually send it into the lab. They put it in pills, and then you buy it, and their DNA actually changes your body's DNA and makes you a better athlete.
So you're eating their shit to change your DNA.
Yes.
Oh.
Wait, I don't want his genetics. I don't want his genetics. His son just went into cardiac arrest.
Well, that's what happens when you get the jab.
I'll pass.
Yeah,
hey,
exactly.
real quick,
maybe Kobe's, but definitely not LeBron's. Yeah.
Yeah. So one thing you can do, and I actually know people have done this, and I know a mortgage professional with guaranteed rate that actually does this with his clients, with business owners. And again, you got to talk to your tax professional and an attorney, because I'm not saying this is legal. I don't know that it's legal. I don't know if it's illegal, but you need to talk to a tax professional and an attorney about this. But as a business owner and as a U.S. citizen who files taxes, you have the legal right to go back 3 years and file an amendments.
Mm-hmm.
Mm-hmm.
I know people who have gone 2 years, did not deduct anything, paid massive amounts of tax, and then got their house. Once they got their house, they filed an amendment and they added in all of the stuff they depreciated or added in the deductions. And so they got a big refund check back once they bought their house. Now, again, I'm not saying, I don't know that it's illegal. I don't know that it is legal. I don't
know that it's illegal, but it certainly seems like it would put you on the red flag list, maybe.
Yeah, on the radar.
Yes. For the amendment. And I don't know on the mortgage side if they purposely don't add in the deductions and they pay the tax. But I do know lots of people that do that. They just pay the tax for 2 years, they bite the bullet, and then they get a refund check once they get their house. What do you think, Sean? Good strategy or bad strategy?
Well, I mean, I'd have to consult with my lawyer.
Yeah.
But I can understand it. And just to preface, it's not me per se. We've never talked before. But I mean, I could see why they would do it. I mean, obviously, it's a business owner that's doing it.
I mean, it makes good sense. It makes good sense.
Doing 0 and 0, but yeah, I mean, it makes sense because what you're doing is you're showing the income to qualify in a traditional manner. Then you're going back and taking your losses. That's all.
Yeah.
Right.
Yeah. That's it. Just holding off to do it. I
mean, if it's there in the code, it's You know,
I know
that's
there's
why they have
nothing
these
illegal
rules.
about doing an amendment. In fact, they allow you 3 years. What I don't know is if there's something in the mortgage code that says you can't amend your taxes after you buy a house.
No,
I don't think there is.
no, not necessarily. But if you do amend your tax returns, the seasoning is 12 months for a lot of investors. So
Okay.
it can't, we can't like go back and amend last year, 2022, so that we can show more income to qualify for the house we're buying today. Right?
You gotta then wait 12 months.
Yeah.
There's a lag between that amendment. Yeah.
Yeah.
So say somebody's looking to get their hands on a bunch of money to buy that house, but they're kind of short on cash and they don't have time to do an amendment and wait for that and do those things. Do you think, Rondi, it's a good idea to ever, for any reason, pull money out of your 401k or your IRA?
My general answer is no, that borrowing money from your IRA or 401k is generally a bad idea. And the reason why is you get taxed twice on it. Mm-hmm. So you have to pay that loan back with after-tax dollars. And then when you pull it out when you retire, you got to pay tax on it again. Now, if you're using the 401k to buy a house, that's a little bit different. Now, if you would have asked me, should I use my 401k to pay off my debt, my credit card debt? I'd say absolutely not. No, 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 and no. If you're using it to buy an investment property or to buy a house, then it depends on whether you should do that or not.
Right.
But I think it should be the last resort. But if that's the way that you're going to get a house for the down payment, yeah, then do it.
Yeah.
So,
but here's the thing. Let me preface that. You don't have to actually borrow. If you're buying it for your house, you can actually pull it out without any penalties. And so now you don't have to pay it back.
Now, what are the stipulations? Is it you have to be buying the first house you ever bought? Do you have to, are there any stipulations on that? Is there anything that?
I would let the mortgage expert answer that because I'm the credit expert.
Well, no, there's no restrictions on it. It's usually going to be whatever they'll allow you. I think Fidelity will give you like 50% of your vested balance if you want to just pull it out, kind of thing. So it just really depends on the terms with it. Like T. Rowe Price may be a little bit different than Fidelity, but those are two common 401ks that are, like guaranteed rate uses T. Rowe Price.
So to people who are out there wondering how they're going to be able to buy a house and they have a large fully vested 401k or IRA, then that's one way to look into getting that down payment or buy a house outright or whatever. But obviously consult your tax professional. That's a pretty serious thing to stumble into a problem and have no way out of. So S-Corps.
I got a question.
Go ahead.
Real quick, since we're kind of on the whole down payment thing, what's your take on gift funds from parents?
I think it's great.
Does that,
I think
one of those things that I wish I had parents that could gift money, but they don't. But it's a question that always comes to me. It was like, well, how is this going to affect my mom if she gives this money to me? Like, I'm like, it's, let's say it's a couple $100,000 for down payment kind of thing. How does that roll over to your side of the table?
Well, you can gift money to someone. They don't pay taxes. You don't get a tax deduction for it. I like, instead of gifting and, donating money, I like to put them on salary. Just like with your kids, you can give them $250,000 tax deductible for the business owner, tax-free for the kid. The kid then can go buy a house with it. You can start a 401k. You can go to college, get a car, go on vacation, whatever they want to do with it. And so I would rather do that through my business. I'd rather give them the money through the business and write it off than give it to them from me personally.
Personal.
Yeah. So how do you give $250,000? I thought it was $12,900 per year. Is that?
It is.
Oh, okay. So $250,000.
It's $12,950 per year, but once they turn 18, it's $35,000 a year until they turn 22. After above that 13,000, you can still give your kids more money than that. It's just they'll be taxed on it at their tax rate, which is generally lower than your tax rate.
Okay, right.
So when I say 250,000, that's generally what you can give them over that 18-year period of them living with you, plus the 35 grand once they go to college or they turn 18. But there's other things you can do along the way to give them the money. We were specifically just talking about the down payment money, which is they're probably adults right now. You can still give that to them and do a tax deduction. And most likely the kid won't pay, the adult kid wouldn't pay any taxes on it anyway. And if it is, it's probably a smaller amount than you would have done anyway as the business owner or as the W-2 employee. Your kid's probably going to pay a lower tax rate than you would.
So how does someone use your business? When someone comes to you, they say, all right, I like this Rondi guy. I like what he has to say. What do you sell a package? Do you have CPAs? What do you offer people that are watching right now who go, hey, I like this guy. Let's see how to save some money. What do you offer?
We offer education, coaching, and professional advice for credit related. So whether it's fixing your credit, deleting the bankruptcies, the foreclosures, the late payments, the oops, I got sent to collection because I forgot to send the AT&T box back, all the way up to advanced tax strategies. So they can buy individual courses. So like I have a course starting next week that's an advanced tax course. We're selling it for $1,500. If you buy it, we guarantee you're going to save at least $5,000 this year on your tax return and every year forward. Otherwise, we give you back all your money. So you could buy that course for $1,500 on its own, or you could buy our entire series of courses for a flat fee of $2,500, which includes how to take your 30-year mortgage and convert it into a 10-year mortgage without refinancing, how to pay off your student loan debt 70% faster, how to leverage your business credit for down payment money. I've helped business owners. Listen to this one. Business owners, we get them a $200,000 line of credit from their business with their business credit. And now that payment is amortized over 20 years. So it's a couple $1,000s a month for the business. You then take that 200 grand from the business, give it to the employee as a loan. Now you can use that loan for your down payment. So that's how you're moving money from place to place. Mm-hmm. So we teach them how to do that as well. And then on the tax stuff, the more advanced thing would be how to do more tax planning and then saving that money that you're not paying the IRS anymore to invest in either apartment complexes that I own or mobile home parks that we're purchasing. And now you're an owner of a mobile home park or a 500-door apartment complex that's worth $50 million, which then offsets your passive income that you would make as a real estate professional or any other business.
Right. So do you have people that will do people's taxes or read their previous tax returns and go, oh, this guy messed this up, this is what he should change, or anything like that? Consulting on that level?
Yeah. So all my staff are FICO certified credit professionals. And then my legal staff, they're all paralegals. And then we work with several dozen law firms nationwide that I'm on retainer as a credit expert witness because they sue banks and credit bureaus, but they need me to explain the credit and the credit reporting system to the jury if it ever goes to court, which it never does because it's extremely expensive if it does. And when it comes down to filing taxes, I don't file taxes, but I have tax professionals that file it. We have tax attorneys, CPAs, and that will actually file the taxes for you and help you with that stuff. I simply educate on the big picture and then push them to the right person. Like Dan, if someone wanted to buy a house in Boise, even though I have a real estate license, I'm not going to deal with it. I'm just going to say, talk to Dan. Mm-hmm. If they want to buy a house, I'd refer them to you, Sean. And so that's what I do with my professionals is we generally teach them. So when they go to the professional, they know what to say instead of just waiting for the professional to teach them. Because a lot of times the professionals don't teach them things. They're just like, well, let's file your taxes. It's that time.
Just do the work. Yeah. So if somebody wanted to get on board with that, rondilambeth.com, or where can they buy a package from you if they were so inclined?
Yeah, they can go to rondilambeth.com, or they can go to fortressuniversity.com. But rondilambeth.com is probably the best place to go, because they can, reach out to me there. They can go, rondilambeth.com will take them to all the other aspects, whether it's our debt settlement division, our bankruptcy division, our tax division, our business credit division, the credit repair division. That can all be found at one of those two websites, or on social media.
Sure.
Everywhere at Rondi Lambeth. I am not very hard to find. I'm harder to find than Andrew Tate, but I'm right behind Andrew.
Let's see here.
I have one more questions for him. So, and I've heard it. It's one of those stupid TikTok, Facebook reels about what's the situation where you're a business owner and you can basically like rent out a home, your own home, as like a convention or like a business something or other, and you get to write off up to a certain percentage of your own home. What was that? You probably know what I'm talking about, but I'm probably
I know exactly what you're talking about.
Okay.
It's one of our strategies that we teach.
That's
one of my favorite things to teach, actually. So there's two ways you can do it. You can do the home office expense. So if you're a business owner and you're using a portion of your home for your business, you calculate the square footage of your house, calculate the square footage of your office, plus a 3-foot walkway. This is what people forget. 3-foot walkway from the front door to the office, front door to the bathroom, bathroom to the office. So you get to count all of that square footage in the hallway. If you're a smart business owner, you'll put your office as far away from the front door as possible.
Yeah.
Literally. Because now you get to count all of that square footage down that long hallway. With that, let's say it's 30% of your house is your business. Now you get to write off 30% of the rent, if it's a rental, 30% of the mortgage interest, 30% of the electricity, the water, the maintenance, the house cleaner, the internet, the toilet paper, all of the expenses, the household expenses, you get to write off 30% of it if you're using 30% of your house or apartment for business purposes.
Or whatever that percentage is. Yeah.
If you do it that way and you own the house, when you sell it, you have to pay what's called recapture tax, where you got to pay income tax on that money that deducted. So a lot of CPAs won't have you do it. I don't know about you guys. I would rather get a deduction today, invest that money, than give it to the IRS and let them hold on to it.
Right. This interest-free loan in the interim.
What Sean was talking about is you have to be a business owner. You must own a home, and you must have an office outside of the home. So those three things must apply. So you own a home, own a business, have an office outside of the business.
What constitutes an office outside of the business? Anything? Could you rent one of those office spaces where it's a co-op and you have a desk and you can go in 1 day a week?
Look, the tax code says you must be a homeowner, you must be a business owner, and you have to have an office outside the home. It doesn't say it has to be a 2,000 square foot Class A on the 30th floor in downtown New York City. Mm-hmm. It says you have to have an office outside the home. Whatever that means,
right?
You have an office outside the home. That's the job of the tax attorney, if you ever get audited, to argue the fact that it's an office. So
sure.
It's my opinion and what I've been told that it just has to be an office. So whether it's a virtual office, obviously it can't be a PO box. That's not an office. It has to be an office that you can go sit in. It's got to make sense. You got to pass what I call the smirk test. If you can sit across from the IRS agent and say something with a straight face without smirking, then you're probably okay. So you can't say, oh, it's my my UPS box that I pay $9.99 for. No, it's got like an office at the Kiln or an executive or Regis where you can go there and meet with a client. That's my opinion. So how this works is, Dan, you golf, don't you?
Sorry, I had to close my window. I what?
You golf?
I like to golf a little bit. I golfed yesterday. Yep.
All right. How about you, Sean?
Not really well. I golf, but I lose a lot. I lose more balls than have fun.
You guys ever heard of that? You ever heard of the Masters golf tournament?
Of course.
Yeah. Oh yeah. Yeah.
Do you know where that is played every year?
Augusta, Georgia.
Augusta, Georgia. So the tax code that I'm talking about that allows business owners to write off an uncapped amount, uncapped. So remember when I said exotic cars and the leases? Obama, it used to be uncapped. Obama changed it when he was in office to it's capped at $18,000. The Section 179 is capped. So these are not unlimited deductions. When you put your kid on payroll, it's capped at approximately $13,000. The Augusta rule is uncapped. Okay? So we have the map.
Where this is going.
It's in Augusta, Georgia. There's not a lot of hotels. There's not a lot of places that celebrities and golf athletes want to stay. They want to stay somewhere convenient. So what was happening is the wealthy people that lived in Augusta, that lived on the golf course and throughout the community, would rent out their houses, but then they'd have to pay income tax on that. So what do wealthy people do? They go to their friends through a lobbyist and have Congress change the tax code to apply to them. Now, if you change the tax code or create tax code, it's not just for wealthy people in Augusta, Georgia. It's every U.S. citizen gets to apply this tax code for business owners. See, our tax code is 4,000 pages. Of those 4,000 pages, only 40 have to do with charging you tax. The other 3,960 pages is how to legally pay less taxes. So 1% is how to tax. 99% of our tax code is how to pay less income tax. So they created Augusta. The Augusta rule says that if you rent your home for 14 days a year, you're not a professional real estate agent. Therefore, you shouldn't have to pay taxes. So you now can rent anyone in America that owns a home, whether they're a business owner or not, a W-2 employee can do this. You can rent your home to someone else 14 days a year, 100% tax-free. So, Dan, you could rent Sean your home for 14 days a year for $100,000. Sean would give you the money. You don't have to pay any income tax on it. You could rent Sean's home for $100,000 a year and not pay any income tax on it, or $200,000 or $300,000 or $3,000. There's no dollar amount. Okay. You have to be a homeowner. Can't be more than 14 days a year. So if you want to rent your house out for 2 weeks a year to Airbnb it, then knock yourself out. That money's 100% tax-free.
But you also have to have an office.
So no, not on the Augusta. So the Augusta rule is for business owners. Mm-hmm. They have to have an office. But if you own a home, this applies to everyone. Okay. So there are things here I'm talking about. If you're a homeowner, it applies to everyone. You can rent your house to anyone out there, including Airbnb, for 2 weeks a year and pay no income tax on it. It's free money. If you're a business owner, you can rent your home 14 days a year, your personal home 14 days a year, tax-free to anyone you want, including Airbnb.
Got it.
Here's where the business
rent it to myself.
Here's the business part.
Can I
rent it to yourself, not a stranger? So you can rent. You can't rent it to yourself. You got to rent it to your business, which is a legal person. Mm-hmm. In order to qualify, you have to spend time working on your business during that time. So the easy way to do it is you rent your home 1 day a month And that's your day that you strategize for your business for the rest of the month. Now, do you two ever sit in your house and think about, like, I got to do this for this client. I got to go here for this seminar. I'm going to put this listing up. I'm going to hire a professional photographer. Like, do you do all of that at the office, or maybe you do some of that at home as well?
Yeah, definitely do a lot of that at home.
You do it at home, right?
I lose a lot of sleep over those thoughts.
Yeah.
Maybe more in the bathroom. In the bathroom, probably.
Look,
you know,
that's why you rent the whole house.
strategizing.
So it doesn't matter if you do it in the hot tub or not. I have a weekly meeting with myself every Sunday in my hot tub with some coffee and a cigar. That's just what I like to do. Now, next to my hot tub, I actually have a whiteboard so I can write on it, but that's a different thing. So all you have to do to qualify for this is document it. Everything's about documenting it.
Mm-hmm.
So if you're a business owner, you rent your home to the business. The business simply writes you a check. It writes it off as rent. You deposit it into your personal account 100% tax-free. So it's not income. Now, when it comes to your mortgage, I don't know, mortgage qualification, it's not income, so it can't qualify as income. It's just money that's in the bank account. And there's no limit. Now, there are guidelines. Here's the 2 guidelines. There's a saying in the IRS world or the tax world that says pigs get fat, hogs get slaughtered. I don't know if you guys have ever heard that. Pigs get fat, hogs get slaughtered. Don't be a hog. Okay to be a pig, but don't be a hog. So, for example, if your business makes $300,000 a year, obviously you can't afford to rent your house from yourself for $300,000 a year. That would be hoggish. So the general rule for the house thing is it's how much the house is worth minus a 0. So if you're in a $500,000 home, drop a 0 off, it's $50,000 for the year. The bottom side would be $5,000 a year. It just depends on where you live. So $5,000 to $50,000 is your range. If you live in San Diego or LA or somewhere where it's really expensive to stay there, or I have a client that lives outside of Clemson, and 2 weeks of the year, it is really, really expensive for Airbnb there. So that's when she Airbnbs her house to her business. And then the rest of the year, it's very, very inexpensive. Or Daytona Beach would be another example. During bike week, houses cost a lot more to rent during bike week in Daytona Beach. Or Sturgis. Think about how expensive it is in Sturgis during those 2 weeks in August. Sturgis is a little town in South Dakota. It's about 5,000 people live there year round, somewhere there. 2 weeks a year, 1 million people go in. And now a house that would rent for $1,500 or $1,200 a month is now renting for $2,000-$3,000 a night. Wow. So if you owned a house in Sturgis, you could be charging $200,000-$300,000 for your house and not pay any income tax on it. So that's what they're talking about, Sean. I know that was a long-winded answer, but as a business owner, you can rent your house back to your business 14 days a year, almost unlimited amount of money. You just don't be a hog about it. And the second way to figure out how much you can rent it is just go to Airbnb and look to see how much a house in your neighborhood or similar would rent for per day on Airbnb. And I would look at prime time and then protect yourself for an audit. I would print that out and then save that, scan it in, save it as a PDF, whatever, put that in your book. So if you ever get audited, you can say, well, the reason I wrote off $30,000 last year for rent is because this is what my Airbnb would get me. And this is what my neighbor or someone in my neighborhood's renting his house for.
So in that sort of same vein, if I say had a party at my house, could I do that as well? I've had a party at my house to bring my clients in, or I have my employees or my wife and I have dinner and we talk about what we're going to do, we strategize, et cetera, et cetera. Same difference, right?
It's not.
Okay.
It's not, because when you rent your house, it's capped at 14 days a year. There's no limit to how many times you can rent your house for the business parties and entertainment. There's no limit to the food side of it. So, and this applies to different industries. So us three here, I'm a credit expert, mortgage expert, real estate expert. We entertain clients. We do things for clients. So it would be normal business practices to have clients over to our home, whether it's a barbecue, a party, etc. Now, in order to write that off, you have to document it, who was there, and what you talked about. So if friends are just coming over to have a beer and smoke a cigar and hang out with you, that's not a write-off. If it's a business client and we talk about, for example, if I come over to hang out with you guys and we talk about some investment properties, you show me some stuff on the MLS, we talk about how we can raise some money, and we're actually doing business, now it qualifies. You just got to document it. That's outside of the Augusta rule. So when I lived in Colorado, I had a real estate company. I had 26 real estate agents that worked for me. Every Friday, I was on a major road through Colorado Springs. I had a big sign, balloons, free barbecue every Friday at 5 o'clock. That was my entire marketing budget for the year. Free hot dogs, free beer, free everything every Friday. I had thousands of people, literally thousands of people a year would come through my real estate office for the free hamburger and the free beer at 5:30 on a Friday on their way home. That was 100% tax deductible because I'm using it. It's not entertainment. It's the cost of doing business. I'm using it as a marketing expense. So if you have people over your house, Dan, 100% you can write that off if it's for business purposes.
Sure.
I like to entertain anyway.
I'll be waiting for the invite.
Yeah, I know. I love barbecue and beer and talking business. So you put them all together and you get a write-off. I know you're probably getting short on time. I do have one more question for you. I want to know how to buy a house with a gas card.
Okay. So one of the things that we teach in our business funding, business credit course is how to obtain credit. And one of the easiest things to get credit for is fleet cards, otherwise known as gas cards. And you can literally get a $200,000 credit card from Shell or Chevron or Maverick or Jackson's or 7-Eleven. Okay. So you can get a $200,000 credit card. Now, you can't just apply being just out of bankruptcy, no income, no profit, no collateral, and they just give you a $200,000 credit card. But you can start with a $2,000 credit card, and every 3 months you ask for an increase. If you are using a lot of gas, they'll just keep giving you more. Now, you're probably not spending $5,000 a month on gas, but you can go into the gas station and buy what's called prepaid Visa cards, up to $500 on each prepaid Visa card. You can use your Chevron gas card to buy a $500 prepaid Visa card. You follow me?
Mm-hmm.
You then take that $500 Visa card and you load it onto a website called Milo. Milo, for 2.9%, will charge that card and send a check anywhere you want it to go.
How do you spell Milo? M-I-L-O?
Melio.com. Melio.com. So you go, I'm giving away all my good secrets here. Imagine what you would get if you actually paid for some of this stuff, because this is just stuff I give away for free.
Sure.
So you go to Milo. I actually did this yesterday. I sent $21,000 to one of my employees as a bonus. And instead of me writing him a check, I put it on my American Express credit card because now I can get points. Yes, it was 2.9. I only get 2% cash back, but I had a little special that said if I spent $100,000 on this credit card, I was going to get 10% in points. So I'm actually making money on it now. So I go to Milo, type in the credit card, type in the information where I want it sent. I hit submit. They charge my American Express card. They send a check to wherever you want, including yourself. So how do you buy a house with a gas card? You put your gas card on this website, you put it in there, they charge you the money, they send you a check, you take the check, you go buy your house.
There you go. There you have it. Buy a house with a gas card. So the last thing I want to say is there was something that you said in the very beginning of the talk that you gave was you said you don't want a creative tax guy, right?
That's right. You do not want a creative tax professional. You want boring, plain Jane, black and white tax professional. Creative people will get you in trouble.
Right.
Everything I'm talking about right now is black and white. It's tax code. It's not loopholes. It's not gray area. I didn't get into the insurance stuff. Do you know, Dan, you can actually create your own insurance company?
I did not know that.
And insurance premiums are uncapped. So if your business is making, say, $2 million a year, you could start your own insurance company, put $1 million a year in insurance premiums. That's tax deductible for business number one, goes into the insurance companies tax-free. Then you can borrow against that. You can invest with that money. You can do lots of different things, all tax deductible.
Wow.
So that's some more little advanced stuff.
Sure.
And that's not a creative thing. Creative thing is these loopholes and this crazy, like, I'll give you a creative thing. Here's creative. Have you ever given your clients gifts?
Sure.
Sean or Dan? You guys give them gifts, right? Closing gifts. Do you know that gifts, if it's under $25, you don't have to keep track of who you gave it to? So if it's $25 Starbucks card, Home Depot card, Lowe's card, American Express, Amazon card, if it's $25 or less, you don't have to keep track of it.
No cap?
No cap.
And I don't mean that in the modern kids way, no cap, bro, but no cap. There's no cap on that.
No cap. So if you want to go buy $100,000 worth of Amazon credit cards, let's not exaggerate. Let's say you want to buy $5,000 worth of Costco cards or $5,000 worth of Amazon cards, $25 a piece, 100% tax deductible for you as the business owner. You can give those away to anyone you want, and you do not have to keep track of who you gave it to.
And
if you give $50, you have to note who you gave that to. So Dan, if you're getting a $100 bottle of wine because they just bought $1 million house, you're legally required to actually keep track of that, who you gave it to.
Okay.
$25 or less. So here's a creative tactic. And I'm not saying this is legal because it probably is not, but it's creative. Do you shop very often at Costco?
Unfortunately, probably 3 or 4 times a week.
All right. How much do you think you spend a year in Costco? Just throw out a number.
A year?
Yeah, just
I don't know, 10 grand. I don't know.
All right, 10 grand. How about Starbucks? You ever go to Starbucks?
Stopped going to Starbucks, but I used to go there quite a bit.
All right. So let's say that you spend 10 grand a year at Costco, another 5 grand a year at Amazon. That's probably realistic. 15 grand a year.
Okay. Sure.
If it's for personal reasons, that's not tax deductible. But what if instead of you personally paying for the Amazon and personally paying for Costco, and you got creative, in quotes, creative, and you bought $10,000 worth of prepaid Costco gift cards, or you bought $1,000 a month of Costco gift cards, $25 a piece, which is 100% tax deductible for the business as long as you give those away to clients.
Mm-hmm.
That's not creative. The creative part is, what if the person you give it to is your wife? Because she's your favorite client.
Right.
That's the gray area. Like, I don't know of any law that says you cannot give a gift to your wife, but it's kind of like, it's kind of creative. Yeah. And then you use that $10,000 of gift cards to buy your groceries. It's tax deductible for the business because it's a gift card. And you just gave it to your favorite client. Or what if, Dan, you gave it to Sean? You're like, Sean, I love you. You're amazing. You always close on time with less money than what you told. better interest rates than everybody else, better service, better products.
Sounds
So for that, I'm going to give you $5,000, but I don't want to. So instead, you buy him
Dan hasn't even taken me out to dinner.
Yeah. $525 gift cards. And now you give it to him. That's creative.
Yeah.
You don't necessarily want to be creative. You just want to be black.
It sounds like that's where you could step in the mud. You could get yourself into trouble.
You could get stuck in the mud. Yes. So that's what I meant by don't be creative. Just stick to the rules, black and white. Don't try all this crazy stuff. And there's all kinds of living trust and executive trust and all these different trusts. And if you put the money over there and you don't have to pay your bills, you don't have to pay taxes. And then you don't have to have a driver's license. You don't have to have a license plate. You don't pay for insurance. You've heard all this stuff before, I'm sure.
Right.
That's all being creative. I don't think that's a good. Now, whether it's legal or not, I think it is legal to drive a car without a driver's license, car insurance, or license plates. No, it's not. It's legal to travel from place to place in your vessel, but it's not legal to drive your car from place to place without a license. But if you call your vehicle a vessel, then technically,
this is that whole sovereign citizen thing, right?
Yes. But look,
I saw some guy get shot for that.
Orange watch on. I got this orange band. I love orange. I do not look good in orange, so I don't do creative shit. I get the black and white.
So if you want to learn the right way to do these things, fortressuniversity.com, rondilambeth.com, Rondi Lambeth and the spelling of his name's right there. Instagram, get on there, get a hold of him. I was fascinated by this stuff, and even more so today. Thank you for coming on and spending time with us and sharing your knowledge of financial wizardry. We appreciate it very much. I heard a few things that I think that we might start implementing right away. Sean, thanks for your time. I appreciate you.
Start with that $5,000 gift card.
Yeah, I'm gonna run over to Costco and get that for you right now. I don't tell you enough how much I appreciate you. I love you, buddy. Thanks, Rondi. Thanks very much.
Thanks, Rondi.
If you find me on social media, mention Dan and Sean, and I'll make sure you get a free credit consultation with us. We'll go through your entire credit report, teach you exactly how you can have a much higher credit score. Most of our clients will see 150 to 250 point increase in as little as 90 days or 3 months. So we've helped hundreds of thousands of people go from a 400 credit score to 750 credit score in 6 months or less and buy houses. So mention Dan and Sean. We'll do a consultation for free.
Awesome. I appreciate that very much. Stick around. Everybody else, we'll see you next week. Thank you.